You're listening to CFRN, a community of believers who trade for a living. To learn more about who we are, what we do, and how we do it, call toll-free 1-866-928-3310, and we'll send you out a no-obligation information kit absolutely free. 866-928-3310. The CFRN Emini Futures Cast is now on Stitcher. Listen to us on your iPhone, Android phones, BlackBerry, and WebOS phone. Stitcher is smart radio for your phone. Find it in your app store or at Stitcher.com. Stitcher Smart Radio, the smarter way to listen to radio.
Are you ready, Steve? Andy? Yeah! Bert? Well, all right, fellas.
You're listening to CFRN, the Christian Financial Radio Network.
Today's broadcast is brought to you by Audible. Get a free audiobook download at www.audibletrial.com/CFRN. Over 85,000 titles. Choose from mystery, romance, religion, science, technology, business, New York Times bestsellers, even children's books. You name it, Audible has it. With 85,000 titles to choose from, you're sure to find the perfect audiobook for yourself or to give as a gift, and it's absolutely free. Just point your browser to audibletrial.com/CFRN. That's audibletrial.com/CFRN. And become a part of the audiobook revolution by downloading your free audiobook today. audibletrial.com/CFRN.
Hey, trader, want to get rich quick? Well, good luck with that. If, on the other hand, you actually want to learn how to trade, the place to be is www.cfrn.net. Tune in Monday through Friday, 9 a.m. Eastern for our daily devotional, and then spend the next 3 hours learning how it's done for professional traders who actually trade for a living. That's www.cfrn.net. Every trading day from 9 a.m. to 1 p.m. Eastern. CFRN, a community of believers who trade for a living.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro, and even T-bills. Joining us today from our studios in Boston, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today's Monday, 24th day of February, 2020. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. Hope you had a great weekend. Hope you had an opportunity to spend some quality time with the family. But again, we're glad to have you right here, right now. If you can't see the screen I have up, go to our homepage at CFRN.net. On the right-hand side of the page, click the big microphone, follow the instructions. You'll be registered in about 30 seconds, and that will give you one-click access to the show each and every day. On the days you're out of the office, away from the desktop, not to worry, point any internet-connected browser to cfrn.net/live, and there you'll find a live, real-time simulcast of the show as it unfolds. And you can also find us streaming live during the show on YouTube, Facebook, and Twitter. Let us take a look at a daily chart of the S&P 500 Emini Futures. Yep, that chart. We drew fibs last week from this swing low. Remember, we had a retracement. We had a pullback to the BBC. Ultimately, the BBC held. It holds more often than it doesn't, which sent us higher. All-time historic high, 33.97.5, put in last Thursday. Friday, we pulled back to the BBC. That becomes a make or break situation. It's either going to hold or it's not. Now, this is what's very interesting. Here we couldn't break below the BBC. And sometimes when the market can't overcome an obstacle, it has a tendency on the next open to gap below. And it did. Here we pull back to the BBC and caught a whale of a bounce. Came back to the BBC again and bounced. We were off the lows on Friday when we closed, and then we opened last night at 33.09. Friday's close 33.38 and a quarter. So from 33.38 and a quarter, the close, we opened at 33.09. And we're now trading just a fraction off the lows of the session. Will this hold? It may, and it may not. If it doesn't hold, it should be good for a bounce. How much of a bounce? Well, let me show you. If we go from this high down to that swing low, price hits this swing low, the shallowest Fibonacci retracement would bounce us back up to 32.57 and a half. That's just the shallowest. Could we bounce higher? Could we bounce as high as this bullish cross? We could. Which would put price just above the 38% Fibonacci retracement. Let me go ahead and put this little rectangle here because it's going to be important. Okay. Remember when we drew the rectangle here, we came down, we hit that thing, and we bounced from 33.87. Let's do that again. We bounced from 33.37 up to 33.67. 30-point S&P bounce. All right. So if price drops to the swing low, and we get the bounce we anticipate, shallowest bounce takes us to the 24% fib, and we're going to say this 38% fib, reverse fib, lines right up with that bullish cross. Okay, should that be good resistance? Absolutely. Would that leave an unfilled gap overhead? It would. If you have any questions on any of this, this is the big picture, put them in the chat box. Okay. Now, after Michael gives us a recap of what happened in the live trading room, I'll be walking you through exactly what happened this morning. Well, we'll start with last night. We'll show you how we addressed it, how we dealt with it, how we traded it. And then you'll have to give some thought to whether or not what we're doing might be right for you. So, let me give you the numbers first from around the world, the cash markets, the indexes themselves. And then we'll talk to Michael, get a recap, and then I'll come back and we'll walk through the charts, both the 30-minute and the 5-minute. Okay? I'm going to show you each and every opportunity that every one of our traders had last night. Okay? Starting here in the US, again, cash markets, the indices. The Dow is currently down 989 points. It's 3.5%. NASDAQ down 372. That's almost 4%. S&P 500 down 110. That's over 3%. The Russell 2000 down 52. And again, that's a drop of over 3%. Later in the show, I'll be showing you the exact entry that we gave every CFRN trader last night to get short at later in the show. All right, in the commodity basket, crude oil down $2.71, trading 50.67 last. That's a drop of 5%. Gold up $26.60, trading 16.7540 last. It's a gain of over 1.5%. The Asian markets at the close. The Nikkei posted a loss of 92 points. Shanghai lost 8.5. Hang Seng dropped 487. That's a drop of 1.75%. In the European markets at the close, FTSE down 247, over 3%. DAX down 544, over 4%. The CAC down 237, almost 4%. That gives us a red day in Asia, a red day in the UK, and it is a big red Radio Monday here in the US of A. Let's go to Michael, get a recap of exactly what happened this morning in the live trading room. And then I'll be back. We'll talk to John if he drops in. And we'll walk through the charts and all of the alerts, which began last night at 6 p.m. Eastern on the Globex Open. Morning, Michael.
Good morning. Yeah, it's actually afternoon for me, but yeah, those gaps were crazy, weren't they? I saw that last night. I came upstairs, right at the open, and I was like, oh my God. And I went down and I told Jane, I think there's some big news event going on or something like that. Something happened. And
yeah, when I saw those numbers come out of China, or just the coronavirus numbers in general last night, it was quite shocking to say the least.
Yeah, well, I mean, I was looking across the markets, and gold was the only one that gapped up. Everything else gapped down, and that's not normal. That's not normal. And so, because the euro gapped down as well, and I actually took a screenshot of it. It is so unusual. But anyway, let's get into it.
All right, I'll hit mute on my end, and I'll be here when you're done.
Okay. All right, here we go. Good afternoon, everyone. Today is Monday, the 24th day of February, 2020. And hiccup. If you've not taken a free trial with us, go to the homepage here at CFRN.net. And you can click on this free 5-day trial. You can click on this, and there's one other place you can click, which is right up here Click on any of them, and it's going to bring you to this page where all we ask for is your name, your email, and your phone number. And you can tell us your biggest trading challenge so we can tailor one-on-one training specifically for you. Hit the send button, and you'll be sent a confirmation link. You must click the confirmation link, okay? If you don't click the confirmation link, well, then, we don't know you took the free trial. So you got to click that link so we know you took the free trial, okay? Now, recap. Today, if you're going to read the spreadsheet, read all the CFTC risk disclosures down at the bottom. Today, as I said, is the 24th day of February 2020. Today we lost 8 ticks in the euro. We made 10 ticks in crude and 11 ticks in gold. Put us at plus 160 on the morning session. Today it took 25 minutes and 3 trades to get to the goal for the day. At that point, we're up $100 a contract. On the month now, we're up $2,623. That's over 14 days, averaging $187 per contract per day. On the year now, we're at 5,422. That's over 33 days, averaging $164 per day. Now, this is one contract, 2 hours per day, okay? And I get distracted by a whole bunch of things, and I end up missing a whole bunch of trades. And we'll go through all that right now, okay? Now, the markets were crazy this morning. When they opened up, they were crazy, and that's why it took 23 minutes, because it was just, they were just all over the place. Started out right here at 9:30. There was a shorting opportunity right here, another one right here, another one right there, another one right there, another one right there. And that was all in the first 2 minutes. And then finally we got in over here. We got a tick there. We got a break even there. We got 5 ticks there. We missed a short trade there. Yeah, there was really nothing going on down here. Yeah, I didn't account for everything that we did because we picked up 5 ticks there. Then I think another 5 ticks there. So my numbers are actually off, I think. We actually did better than what I thought. And then we had a break even. Then there was a lot of stuff going on in other markets, so I didn't see all that was going on here. There was a shorting opportunity right there, along there that I missed. If I highlight it, that means I actually saw it, a little bit after the fact. But this other one over here, I didn't see that one. Yeah. Then it started getting choppy. Toward the end of the session this morning, it started getting really choppy. And I was thinking that there would be a lot of opportunity during the break. And there was some opportunity. Okay, there was a long trade right there that you could have picked up a little bit on. And, Bart, is Bart in here right now? No, he's not. But I'll just say this for everyone's benefit. This morning, Bart was asking about the YBR and the colors. We talked about it in the partners meeting last week and how to use it and how to trade it. You see when you got blue on the YBR, you're getting up close and you have bullish separation down here. Bang. Blue on the YBR. Still had a little bit of bluish separation. And up it goes. Now over here, we had blue on the YBR, but we did not have bullish separation. So nothing there. Okay, so everything turned around and there was a shorting opportunity right here. And see red on the YBR, bearish separation, down close. Red on the YBR, down close, no separation, no trade. Blue on the YBR, blue on the YBR, up close, bullish separation, bang. Okay. Now, the regular trade setups that were generated in that period were right here and right here. Okay. That was during the break, and that was gold. And gaps get filled, and I'm gonna go through that in a few minutes. We're below our lowest weekly trading zone right now. Right, this is our lowest weekly trading zone right here. And usually, if we're below our lowest weekly trading zone on Monday or Tuesday, by the end of the week, we'll be up at the highest weekly trading zone. And for that reason, I had suggested this right here. 33.35 calls, March 2nd. Okay. And in the crude oil, we'll get to the crude, but the crude is in the same situation. I didn't actually suggest any over there for him yet, but well, let me just jump to crude right now. Okay, and let me bump it to a 30-minute right up there, 53.30. Okay, now my call for the options Thursday morning last week was to buy puts and look for it to get to 53.45. Now, when I said that, price was up here, and it looked like it was going up, right? And it looked like it was going to continue going up. And I said, well, look for it to get back down here, right here. And it did do it once right away. It did it again, and then again, and again, and again. So, if you bought those puts were, they weren't going to expire until, I think, Wednesday this week. You made a killing if you bought those puts and you held on to them. But so what did I just say? 53.35 is where I think this is going to go. So calls going up to 53. I mean, you can buy them right now, but we don't want February 4th calls. We want March 2nd calls. Okay. And you can buy them right now for 53.5 calls, where there's a little bit of volume and a little bit of open interest. You can buy them right now for $880. And, I'm just going to print that, and we'll see where this thing goes by next week at this time. Okay. Just something to think about. Now, because we have a huge gap to fill here, we have a huge gap to fill on the euro, and we have a huge gap to fill on gold. Okay. So on crude, our first trade right here, this is where we got the goal for the day. We picked up 9 ticks right there to get the goal for the day. Then we had a break-even trade. Then we had a +1 trade right here. And we ended with +10 on a crude for the morning session. During the break, it was pretty choppy and sideways right in here. Then the cycle wasn't letting, it needed to do a cycle reset is what it really needed to do. And that's what it did right here. What that means is the cycle moved up on very little upward movement. It moved from the bottom to the top on very little upward movement. And then you were going to put in a lower swing, and it was going to drag it back down and give you more opportunity on the downside. And that looks like what it's going to do right here. Now, right now, we have bullish separation, but we're trading below the BBC. So there's not really anything you can do with this. Right over here, we weren't trending. We're still not trending. So step one is make sure you have a trend. We don't have one. In the euro, you poor little thing. The euro had a lot of opportunity in the pre-market. Okay, and then I got in right here, it stopped me out to the tick, and then it went up and did what it should have done. The green line got up into the cycle, but then it just got really choppy, and there really wasn't much we could do in here. Okay, even during the break, really nothing during the break. So that was the euro. Now the ES, let's take a look at this bad boy. All right. Hang on. Got a lot of drawing objects in here. Come on, data. There it is. Okay. I'm trying to scroll backwards right now. So give me a second. I got a new monitor yesterday. Woohoo! I didn't even know I was getting it. Jada got it. Set it all up for me and everything. Okay, here we go. On the ES, it started out really choppy. Then it gave a higher high right there and a long opportunity right here that I missed. Another one right there that I missed. Another one right there that I missed. I didn't trade the ES all day. I missed everything on the ES because I was busy watching everything else. Had a short right there that I missed. Let's just go through here. The slingshot wasn't letting us trade anything right in here. Okay, then right in here was a long trade. Right here, another long trade. Right here, another long trade. Right, and then we didn't have any news today. So 10 o'clock was nothing big. Here we had a shorting opportunity. We should have put in a lower swing. We didn't. Then there was a momentum short right here that you would have gotten a break even on. Then it got choppy. Turned around, started moving up. And let's see. There was a long right there. There, another long right there. And turned around, started to go down. And that was not a valid short. That was right there. I highlighted. Then again, it got really choppy and slingshot got all messed up right in here. You know, if you're doing 164s and 137s, there are a bunch of those, 128s, a bunch of those too. But using the two trade setups that we do in the room in the morning, you know, there was that one, that one, and that one. This would have been profitable. This would have been break even. This would have been profitable. And this one, which obviously would have been profitable. Okay, and I was trying on those. I just wasn't getting filled. Okay, and let's see, during the break. During the break, there was a shorting opportunity right there. And there's nice movement here during the break. You know, if you're doing, well, the other trade setups, there was some good opportunity in there. And in here, doing the two trade setups that we use in the room in the morning. Dwayne, can you grab it for a minute? Or Valerie?
Yeah, what's up?
Okay.
Hello?
Just grab it for a minute. Somebody just showed up and I don't know who it is.
All right, go ahead.
Go check. I'll be right back.
Yeah, no problem. All right, guys, I'll grab the screen here in just a second. What's Michael looking at? We'll see
He's
how
just
long.
finishing up on the ES. I'm sorry.
Okay. All right. On the ES, this last move down, textbook, bearish cross, price pulls away, price pulls back to the BVC, And as long as you got a red and falling, you got a red below the 50-yard line here, you get a leg and a retracement, 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 and a leg and a retracement, and a leg and a retracement. And there's a low down around 32.26. So, to share anything more, I guess I better take the charts. I thought I'd give him just a minute to see if he's going to pop up. Anything you want to add, Valerie, before I take the charts?
Okay, I'm back.
Oh, okay. I was just getting ready to grab the charts, but you're back, so
Yeah.
take it away. You still got
All right, I still got it. Okay, so in here on this way down right here, where it was grinding its way down, if you look down here at the slingshot, every time the green line pulled away and price pulled up and touched the BBC, there was good separation down here. And, you know, you'd had to draw your trend lines most of the time and use the trend line trade most of the time, because you see how it didn't actually hit the BBC there or there or there, but it did here, but the cycle was going up too steep. Let me catch my breath. I just ran up and down the stairs. And let's see, and that was all during the break. Now let me see, slide this over to the present. There was a long opportunity off the BBC right here. This, yeah, if I drew a trend line right here, that would have been a long opportunity right there as well. Yeah, we hit the BBC and gave it down close. We weren't really trending very well, though, so I probably wouldn't have done anything with that. I would have, with this right here, gone short. Well, you could have gone short here or here. And then it started this move up. And that's where we are right now, in a move up. But there's no trade setup there. Okay. So that was a lot of stuff. Could I repeat the crude option play? Yes, I will do that. Let me go and get it. Here it is. I was looking at the 53.5 calls. I'm trying to bring the window over, but it's being difficult. I think. Yeah. I'm still trying to drag it over. Come on. Yeah, what if I do this? Yeah. There we go. Okay. So yeah, I was looking at the 53.5 calls. I didn't want March 13th though. I wanted March 6th. But I'm still looking at 53.5. They'll be a little cheaper, $650 right here. Now, if you go out to the 54s, there's more. Well, actually, there's not more open interest. There was more volume today, but not more open interest. You know, you just got to price it, but that's what I'm looking at. The March 6th GCLJ 0, 53.5 calls. Okay, Alan? Because we got to fill these gaps. Or at least try to fill these gaps. And try and drag it on this computer. I'll just minimize it and get it out of the way. I have too many things running right now. I'm going to close this. Okay, that should help. I have multicharts.net, Ninja 7, Ninja 8, DT Pro, and OEC running all at the same time right now. All right. So let's go back here to the spreadsheet. Now, if you can read the spreadsheet, you can read all the got to read all of the CFTC risk disclosures down at the bottom. Today is the 24th day of February, 2020. We lost 8 ticks in the euro. We made 10 ticks in crude and 11 ticks in gold. Put us at plus 160 per contract on the morning session, and took 25 minutes and 3 trades to get to the goal for the day. At that point, we're at $100 a contract. On the month now, we're at $2,623 per contract. That's over 14 days, averaging $187 per day. On the year, 5,422. That's over 33 days, averaging $164 per day. Okay, now if you have not taken a free trial with us, you need to go here to the homepage at CFRN.net and see Dwayne right there and hit apply.cfrn.net, or scroll down here to free 5-day trial, or use our proprietary indicators for free. Either one. And it's going to bring you to this page right here, where all we ask for is your name, your email, your phone number, and you can tell us the biggest trading challenge so we can tailor one-on-one training specifically for you. Hit the send button, and you'll be sent a confirmation link. You must click on the confirmation link. Okay, if you don't click the confirmation link, we don't know that you took a free trial. Okay, so make sure you do that. Okay, finally caught my breath. And with that, we can pass it back out to fabulous Phoenix, Arizona, Studio A, overlooking South Mountain, America's largest city park. Dwayne, if you are ready.
Yes, I am. Let me grab the chart.
Sorry about that little interruption.
Hey, no problem.
Some strange person pulled up in this dark black sports car in front of my house and rang the doorbell. And it happened to be a delivery person.
So they got, I guess the delivery guys are doing good these days.
Yeah. Yeah. I guess.
All right, on this daily chart, we can see buyers coming in here trying to bid this thing up before we catch that low. Is that typical? Buyers come in early because they know there's going to be a bounce here and they don't want to miss the opportunity. It happens. Michael, recap of the recap.
Today it took 25 minutes and 3 trades to get to the goal for the day. At that point, we're up $100 per contract.
All right, guys. We had an incredible night. That's a good bingo, by the way. We had an incredible night on Concierge Trade Alerts. We had an incredible session on Logic 247. I'm going to go through all of that. I'm going to break it all down, move by move. We're going to look at a 30-minute and a 5-minute today. First, we're going to talk to John. I think he's here.
Not yet. Not yet. I'll let you know. I'll just open up his mic when he shows up.
Okay. Sounds good. Alrighty. Let's go to a 30-minute. Get the lay of the land. Now this trend line, where did it come from? It's been on my chart for a while. I'll be honest with you. Let's scroll back and see. If you've never done that, if you've never just left a major trend line on your chart and then suddenly it reappears weeks later, sometimes even a month later. So what was this trend line all about? Okay, this was when we put in the swing high on February the 6th. And we had a leg, and then we put in a lower high, and another lower high, another lower high. And as we scroll across, we can see we got back above that trend line. We got above it, pull back, kiss the top of it. Off we go, blue and climbing. And bringing us up currently, keep your eye on that trend line because it becomes important right here. Today.
Okay, I just opened John's mic.
Now, we're breaking through that trend line, and if you didn't have this trend line on your chart, it's not a problem, it's not an issue. I'll talk to you about all the important stuff, the stuff you do need to know, the stuff you do need to be aware of. John, and we'll talk about all of that as soon as we finish talking to John. John, welcome to the show.
Yeah, good day to everybody. Well, part of my prediction came true, which is one of these days you're going to wake up and find the Dow is down 1,000, and that day is today. They did one of their ramp jobs, and just as it was kind of down 1,000 at the beginning, they kind of ramped it up. And so far, the stocks, the FANGs, Roku's acting quite well today. It's actually rallying quite well, maybe on the belief that a lot of people are going to be using the service if they're, locked in their houses. But certainly Roku's acting well, and the gold stocks in general acting pretty good. But you have to be prepared for the possibility that they're going to ramp this thing later today to try and avert further downside. If they're successful, if they can ramp it up sort of towards what's the S&P right now? 323. Yeah, I think it's at a critical point right here. Actually, Morgan Stanley kind of came out and said it's essential that this area holds here. Otherwise, it'll kind of invite continuous selling. So if they can ramp this thing back up to some degree, it could save the day. At least we could get a bit of a reversal, maybe even have an update tomorrow. But the overall heaviness of the market and what's going on is a very tough thing to overcome. But you've seen the coordinated power of the Chinese, that they were able to postpone this downturn quite a bit, and there was a kind of a melt up in the meantime. So you have to be very, very careful getting to, in spite of how much we're down, you have to be very, very careful, chasing shorts higher, or chasing the VIXs higher and things like that, because if they knock the VIX down about a point, the UVXY going into the close, it could change, it could certainly change the equation. But I think, just as a matter of, as I said last week, as a matter of prudence, insurance policy, it's pretty good to have a hedge against the downside move, because in a market like this, there's no telling what could happen. And unfortunately, the news is getting worse, and is likely to continue to get worse. There's this guy, this billionaire over in China, is saying all kinds of crazy things about, and look, a fellow called me confirmed to me yesterday, he thinks there's 75,000 dead, which, you can't say, that sounds pretty credible given what the billionaire said. And he was on the phone to Steve Bannon. So I think Trump, in spite of his spectacular trip to India, and one of the best speeches he's probably anybody ever gave in history, this morning, that was some kind of a speech he made to that in that cricket ground. Just absolutely one of the most amazing speeches of all time, for sure. There's nobody in the world who can do that. I mean, Putin couldn't get up there. Xi can't get up there and do anything like what Trump did. He really did. He's a unique guy. I mean, there's just nobody like him, and he really wowed the Indian people in a big way, and kudos to him. So I heard over the weekend this whole thing could be some kind of a deep state deal to try and knock down the world economy so that Trump doesn't get reelected. Anything's possible, and as we've been warning recently, the risk of something going wrong between now and November has probably increased quite markedly, especially with Bernie winning as much as he did in the so far, and he's basically conning all these millennials into believing that he's got the solution to everything's going to be free, free college and all the rest of it, and it's easy to get seduced into believing that's possible, but at the end of the day, it's probably going to run the country into the ground. So it's really a serious, this bull market just got torpedoed. We used this word several weeks ago. We said this thing could get torpedoed by what appears to be a combination of Bernie's success and this virus, coming out of the left field. It's really troubling, to say the least. It probably means that right now the VIXs, I've been waiting for the day actually when the VIXs kind of start to get some premium into them. It was kind of a surprise to me this morning that they weren't up more, given the fact that the Dow was down 1,000. You would have thought that they would have risen substantially more than they did. And I was a little surprised that some of the gold stocks didn't do as well as I expected. But I think they're going to try hard to ramp this market this afternoon, in spite of it all. And if that's the case, now Royal Gold is a point. I mean, look, they sold this thing off. That's kind of one of my surprises. They sold this thing off from the open, and it rallied a bit. But if it turns down, along with the Nugget and a few of these other stocks, it could actually, it could mean that we're going to have a bit of a rally in the market over the next few days. There is an argument to be made for this pullback to re-energize, the upside, because look, if they come out with some stuff this evening that maybe the things aren't as bad as they seem, maybe the infections are down or something like that, obviously the market.
Do they have a specific time of day that they report the numbers?
It usually comes around 6 or 7 at night, but it's very iffy. So there's no kind of, and even on Twitter, it's hard to find consistent sites. With Google, the coronavirus, or China, you get sometimes you get somebody tweeting, the latest breakdown of cases around the world and the numbers in China, etc.
And you have no idea whether they actually know something or just making it up to hear himself type.
Well, it very much looks like they're making it up, and remember, when we were at the worst point, a few weeks ago before that big rally, a big melt up where they ignored the whole thing and just went to new highs. But now it's because it's spreading around, fairly rapidly. Here's the thing. Look, even if obviously the 80,000 infections are pretty much for sure, right? So we've gone from one infected, person to 80,000 in less than 3 months. That's staggering, right? If it's 2 million, we've gone from 1 to 2 million in less than 2 months. That's petrifying. That's scarier than hell. So, and if the death count is as bad as it appears, or as we're rumored to be, then obviously it's really, really diabolical. And the way they're if this is true of what they're saying, there's no respect for the dead, for the dead people, these people who are infected and they're dying. They're just like shipped out and cremated immediately, and that's the end of it. It's pretty brutal. So the world is in a world of hurt right now over this thing, and the consequences are pretty troubling. Because we still got a couple of cold months, 3 or 4 cold months before the temperature heats up enough to maybe knock off this virus, or at least, maybe stop it from being, some people saying it's going to be a 2-year deal, and it could be. So it could linger, and go through to next year. So the thing, it appears to be incredibly infectious. That's the real problem. And now the quarantine period is longer, and it's really very troubling.
Yeah, it is. It is. And I think it's going to get a lot worse before it gets better. Sorry to say that.
Yep. Yeah. Well, the market's telling you that right now, because every single rally, this is like Friday again, every single rally, you couldn't, you couldn't kind of, what's the word, just couldn't get any traction. And then there was that late rally, which kind of set people up for hope, that we weren't going to have a day like today, but that was not to be. And I'm sure you did very well on your numbers overnight.
John, we said to sell 32.96 on the S&P. We've dropped 65 plus points. On the Dow, we said to sell 28,570. We've dropped over 500 points on that move. And on the Russell, we said to sell 1649, and we've dropped 26 points. The Russell, like the S&P, pays $50 per point. So this is a 26-point Russell move at $50 a point per contract, and the market's still falling.
Yeah.
Now, we've got no bottom in place yet. In fact, we just broke to new lows.
Yeah. Well, John, fantastic job. I think that's a record for you.
Possibly. It's a record day for the market, so
Yeah, I don't think you've ever had a trade like that before. That's really remarkable. And
the call on the NQ was to be short 93.10.
Yep.
Which is right about here.
So, yeah, let's see what happens now. But it does, again, now they're having another go at a rally here. But when these rallies come, they come even in a day like today. So you can't rule it out. If we have another down day tomorrow, I think the rally that will come out of it could be a very big deal. It could be something, even though we might get knocked down really badly again overnight, maybe another 1,000 points or even more. I think the rebound will be pretty spectacular. So it'll come, and you've got to be ready for it, because I think it'll be very opportunistic. So if you put up Roku, you got Roku up. Sorry, no. If you could put Roku up for a second.
Yeah, I'll be happy to. The NQ was a 260 point per contract drop. 260 points at $20 a point. Not suggesting that anyone got out at the exact swing low, and that number doesn't reflect the exact swing low. I just rounded the numbers. But every one of our traders knew exactly where the entry was. So, I'm sorry, now you asked me to put up Roku?
Yeah. It's interesting because Roku is actually rallying today. It's still down a lot, but it rallied up, but now it's kind of rolling over again.
Anything green today is certainly an anomaly.
Yeah, look, some of the high flyers from last week, STMP, actually, I just missed selling that on Friday. Just missed shorting it right at the top. And it's obviously down
daily look at it.
DCO is the other one that's down. That's
Which one?
gradually-
Which one?
DCO is gradually losing.
DCO. Okay. Got it.
That's the one. Yeah. That's another one that's pulled back today. Enphase, ENPH.
There's green on a red
Yeah,
day.
it's kind of holding up quite well, actually, that stock. It's a really, really good company. So it's, Apple and, well, Microsoft was rallying earlier on, but it's kind of giving it up now a little bit, MSFG. So, yeah, see what I mean? It's kind of, if there was a late surge, you could make the argument that, look, I remember we talked about the island top. Wow, look at that island top.
Yeah, I mean, those gaps are almost identical there.
That is a really big deal. That is that is a very
very unusual, number one.
yeah. But
And that would be a perfect island top if we continue lower.
Yeah. And unfortunately, that looks to be the way, because an island top like that has got a lot of downside ahead.
Now, John, here's the daily on the S&P, okay? The most recent retracement that we had back on January 31st, the one that took us below the BBC, the swing low of this candle I'm hovering over right now,
Yeah.
was 3212.75. So I've drawn fibs here, and so, I mean, just take a look at this line. If this gives way, then on a daily chart, the next support is down here
Yeah.
in this area. And if that fails to hold, guys, we're talking about numbers down around 3120, 3100.
Yeah, unfortunately, it looks like that's where we're going, probably by tomorrow. But I think we'd bounce from there, or possibly.
Well, my suggestion was when we hit this low, when we hit this swing low, that's where we're looking for a bounce. And that bounce could take us as high as the 24% reverse fib, or it could take us up to the 38, which is right where we had the bullish cross. And so price is attracted to those important prices, important areas. So a bounce to that 38, to that bullish cross, a bounce up, and then a continuation down is possible. So if, as John said, if somehow they do manage to rally this market into the close, if it's a weak rally, you'll be looking to short it here. A strong rally, we'll be looking to short it here. And I don't see this gap getting closed. Maybe not even this week, John.
Yeah, it looks very ominous, this whole thing, frankly. And why don't we have a look at the gold stock, the gold, actual gold price right now, the gold.
Okay, do you want to see it on a 30-minute? Do you want to see it on a daily?
Probably the 30, maybe a 75-minute is kind of an interesting, or 70, yeah, 75 or 90, maybe they're 60 or 75.
Yeah, let me bring up another chart. Okay, tell me the time again. Got 45 minutes at work.
Yeah.
Okay.
It's really, well, it's not, it's pulled back a little bit, but it feels like it could go.
Oh, it's ready to
higher.
go. It's ready.
Yeah.
It's ready to pop.
Yeah. Just the same as, last night, the way it went up. If you could actually go to the monthly
Now this 1680 is the next to the highest weekly trading zone for this week on gold. The highest zone for the week on gold is up at 1715.
Also, what's happening with the silver is has kind of gone up and taken out those spikes that were holding it back. So, and the commercial shorted some more silver on Friday. So you see what I mean? It's really starting to, if you can squeeze it up now and see what it looks like.
Yeah, let's go daily on this.
Okay. Yeah.
That's a beautiful thing.
It's really, it's kind of looking like it's going to go through 20 pretty quick. So the...
when's the last time we were north of 20?
Long time ago.
Long time ago. That would be back 2016.
Yes, yeah, exactly. Yeah. So, and we've kind of negated all the negatives there now. So, it's if you could, can you go to the monthly?
Yeah.
Or the longer term, or the weekly, or the monthly?
Sure.
Yeah, I mean, look at that monthly breakout now. I mean, that is really ready to rock, and the silver going.
We need to get north. We need to get north of 22, and the momentum of breaking 22 should take out 25, and then that takes us up to 34.
Yeah. No, it's going to go, and if you can go to the gold. Oh, incidentally, guess what they're spraying the streets with in Korea, and not possibly China as well, and Japan. So they're spraying it with silver iodide.
Really? Is that like colloidal silver?
Yeah, same thing, same sort of thing.
Is it? Okay.
Yeah. Now, remember we said we talked about this consolidation. Remember we went back to the time when we went up to 1923. And notice how every time we took out a red down candle, we surged to a new high. We actually had quite a surge each time on the way up from 2009 all the way up to, see that, right? And now on this side, it's a different type of thing. The down candles are not. We're not getting those down candles. We're getting consolidation. And if you remember what I said, the bottom of 1235 right there, the first rally was $150, right? And then the second rally was 300. So I believe this rally is going to be 600, given the power of the rally and the length of the consolidation. And we've broken out above this. And remember we said this thing should accelerate once that happens. And that's beginning to look like the case. So it certainly puts us within range of getting up to about 1850. I really believe this thing's going to barrel higher now to 2400, 30, somewhere between 2400 and 3500. It's going to go. It's looking very likely. It's certainly 600, from 5 and 611, 2100 is probably a highly likely target now, 2100. Maybe even 22. So
this virus is having its impact on crude oil as well. Last night, the alert to all of our traders was to be short 51.85, and there's 51.85. So from 51.85 to 50.85, and we're lower than that, but just rounding it from the entry at 51.85 to 50.85, that's $1,000 per contract traded.
Yeah, boy, now we're breaking down again on these stocks. It's really starting to look.
When do the curbs kick in?
A good point. We might be getting close to the curbs on things right here.
Let's see what we get. Stock market curbs. Let's see if this one tells us the actual numbers. We know what a trading curve is. Well, maybe some of us don't. A trading curve is when the market drops so much or rallies so much that the exchange just doesn't consider it safe for anyone to be trading. And they will, all right, let's see here. The S&P 500 index serves as the reference index for daily calculations of 3 breakpoints, level 1, 2, and 3, that would cause trading halts. Level 1 is a 7% decline from the previous day's close of the S&P 500 index. Now, what's our percentage drop so far? On the S&P, let me pull in fresh data. S&P, well, we're only down 3.5%.
Yep.
So
By the way,
this thing would have to drop out. I mean, we would have to see double what we've seen for this to kick in.
Yeah.
But folks, keep in mind, these are here for a reason. So, I mean, if you don't think we could drop 20% in a day, we can. Now, we're down 3.5%, and everyone says the sky's falling. We talked about this last week. I said, it's coming. You're going to start hearing, the sky's falling. Don't get too rattled. Now, we have something going on that typically does not go on during these types of sell-offs, and that's this coronavirus. That's the unknown factor. That's the question that no one can answer as of yet. Now, if the world survives this thing, and I fully believe that it will, there's going to be an awful lot of time and energy and money into dealing with these types of issues going forward. So companies out there who can develop technologies to quickly lock down a city or a mall or the whole biofield should explode off of this once the rout is over. So level 2 is a 13% decline, level 3 is a 20% drop. Under current rules, a trading halt on an individual security is placed into effect if there's a 10% change in the value of a security that is a member of the S&P 500 index, the Russell, the NQ, within a 5-minute time frame. 30% change in value of a security whose price is equal or greater than $1 per share, and 50% change in the value of a security whose price is less than $1 per share. Now, I pulled this right off Investopedia, guys. You might want to go there. In fact, I'll grab this link. I'll copy it. I'll paste it into the chat box. Only those of you who are logged in through the CFRN website will have access to the chat box, but there's the link to the trading curves. So we hope we don't see them kick in, but if they do, we're going to trade what's in front of us. What else you want to take a look at?
No, listen, I think we covered everything. The silver, it's now up 38, so we're getting towards 19. Honestly, it kind of looks like we're gonna get through 20, possibly as soon as tomorrow or tonight. The one thing that could happen is the market could try to take it up overnight. They've done it before. So that's how they did it the last time, when they kind of caught everybody. Everybody was like bearish and they were kind of loaded up with fixes and things and short the market. And then next thing you know, they took it up overnight and the next day there was a big rally. So you have to be mindful of the possibility that will happen, but frankly, it doesn't look very likely at the moment. It really looks like this is kind of an overwhelming situation that just is gathering momentum to the downside, and the VIXs are gathering momentum to the upside right now. So
If this is nothing more than a head fake to the downside, which I'm believing at the moment that it possibly could be. Our alert last night was to be long 1673, and we made it up to almost 93. So that's about almost a $2,000 per contract trade there.
Yeah. We're getting, as we're going down here, we're getting to a point where a rally could come out of nowhere, because,
in gold or the index.
Yeah, because while we've been talking, Apple's really kind of been trading sideways. Microsoft the same. Roku's been kind of actually going up. The market could suddenly snap back if the right ingredients are put upon it. So, but all these high flyers that were head scratches last week.
Hey, I just noticed Garrett popped in a minute ago. You want me to get him on the phone? You want to talk to him?
Sure. Yeah.
All right, just keep talking for a minute, and I'll call him. Okay.
Oh, okay.
Do you want me to bring him on? Would you like to chat with him?
Yeah, no, for sure. Yeah, definitely.
All right, you just keep talking and I'm going to hit mute on my end so I can call him.
Yeah, one of these high flyers from last week that were kind of head scratches are really coming. They're paying the piper today. Federal Express is one of them. It's down dramatically after being, inexplicably higher for the last, most of the month. It's given half of its gains back already, and probably it's going to give the rest back before the month's out, or even a few days. So this may be this may be a point from which we could launch something here, just about right here now. When you get these spikes and you get them taken out by a small amount, there is a kind of a dynamic, or a case for a dynamic reversal that probably could get us back to 9,200 maybe on the NASDAQ, if it's as good as they can muster. We'll just have to sort of play it by ear. And the other thing is, it's very hard to buy these dips because you trying to catch the one that actually doesn't come back on you is pretty tricky. But this may be it right now. I think there's a bit of a sense that this might be close to a reversal point. And actually, it could potentially form a fairly strong bottom if that's the case.
He is going to pop back in here in a second, John.
Yeah, at least for the short term. What I'm noticing about these, we have these pivot points all the way, and every time the pivot points sort of, the market takes a stand. If the pivot point gets negated, there's another down leg. That's what happened on Friday. We had a rally that looked like it was going somewhere, and probably people were probably sucked in by that rally, thinking that the market was going to open higher today. And the exact opposite happened. Then there was a sort of a pivot point during the night. Around about 10 o'clock last night, there was a bit of a rally that got negated. Next thing you know, we had another big down leg. Then there was a pivot point this morning because they had Buffett on. And he was sort of saying, oh yeah, we're going to be buying stocks today, and all this sort of thing, and didn't seem like, and that created a rally. And then once again, it kind of was imploded upon itself. But right now, we definitely got a rally attempt underway, and this just might be a sustainable, turn into a sustainable rally.
Gold's kind of holding steady here. Now, I was looking for it to be a head fake.
Yeah,
That little bounce has retraced. So if we get back below red and falling, then we're going to have to start looking at it. On the short side, of course, you got this unfilled gap here below gold and above all the indices. All right, let me look and see if Garrett's here so I can open up his mic. Sorry, Garrett. No, yeah, there he is. Hey, Garrett, welcome to the show.
Thank you. Good
Glad to have you with us. John's here.
Hi, John.
Hello there. Yeah, I'm interested to hear your take on things. This is sure one of the most. This is got to be one of the most historic sell-offs in history right now that's going on here. The beginning of which, at least.
You got charts you want to show there, Garrett?
Yeah, sure.
All right, let me pass it over to you. There you go. All you got to do is accept. S&P 500 cash index weekly. Got it.
Yeah, this I think is a very interesting trend line because it starts, if you can see my pointer here, it starts down here at the bottom in 2009. When you're coming out of an extreme low with the S&P at 666, you pop up. Of course, this line isn't created yet, but if it were, you pop up above it, you come down. Here's where it's based on, these two lows right here in 2010. You're up above it until pretty much through 2011, and since that time you've been underneath it. Right. You came up against it here in 2014 all the way up to early 2015. The high, of course, was in May, and then you came up and touched it again in January. Wished I had this line then, but I saw that as that was a pretty obvious top. You had lunar eclipse and all sorts of things going on there along with it. And here we are again. Didn't hit it here, but here in the last 2 weeks we came up and touched the line again. So it's pretty remarkable. It's funny. It looked to me like we were in a third wave on the monthly chart, and still looked like it. It still looks like it to me to some degree. But it's going to be interesting to see. All the stuff that I got on the coronavirus for the last 2 weeks was way, way worse than what's been reported. And I got received a video, I think it was yesterday, from a Chinese fellow talking about the massive amounts of incinerators that they've purchased, and that the death total is significantly greater than. Let me just turn off my phone here. The death total I've been hearing for a couple of weeks is much, much greater than what's being reported. And if it was a animal or rodent or whatever carried virus, the communists would have let people in at the outset of it, so you could have the benefit of scientists from other countries who could help you with the problem. But it's pretty clear that that's not what the case was, because they're not letting anybody in there. So anyway, I probably won't get into that stuff because but it the fallout on this thing is scary, and I think when at some point they're going to come out probably with a vaccine. And of course, if you've seen the movie Vaxxed, you don't know if that's it's one of those things. It's like various pharmaceuticals. They tell you that this can help your problem, but you might have your liver may fail, your arms may fall off. Sometimes the side effects of pharmaceuticals sound worse than whatever the problem is that they're trying to alleviate. So, and this may be another one of those situations. I mean, the interesting thing on this chart, though, is that even with this horrendous decline, you know, if it is the top, and prior to the coronavirus, I would have said that it's not the top, and that this is the little wave 4 of a wave 3 that I would be looking for, and we want to buy it to go up to a new high to finish off wave 3, and then you get an ABC correction of who knows what, 10% or something leading into the summer, and then you get a big rally into the election. That had been my roadmap. And still is, because I'm not creative enough yet to change it. but that's still pretty much the roadmap. But this coronavirus throws a real wrench into the works, because I don't know if we're going to be told the truth about it, or if or when. And if you're not told the truth about it, how do you plan for something that's that may not be true? Or, you know, maybe the extent of what they're talking about isn't anywhere near what the extent of this situation is. So, you know, I don't know. What do you guys think?
No, I totally agree with you. I think you're dead right. And that's what, you know, I mean, actually, I think this might be one of the biggest down gaps in history right now. Today.
Yeah, I mean, I was looking on the prior one. We had a Friday Monday potential situation, but we dropped down to the lower Bollinger Band and the 50-day moving average, and it held. This time, of course, it didn't, and I'll show you something, John, that I'm kind of watching here. Let's see. Let me see if there's anything else on this page that's worthwhile. Just a sec. Well, I did this at 3 o'clock in the morning, so I'll have to take it for what it's worth. But I just was, you know, trying to use the what I think are the most important channel lines on this, and the shorter term ones. This tops line from here to here, off this low, brings you down here, which happens to be a 382 correction from the June low, and they intersect here, which is tomorrow. And if you have a Friday Monday waterfall decline, which is what we have, and which I was hoping for over here, actually here, now we've got it. So the logical time for this to turn would be, presumably you're going to get very negative news today on the TV, and maybe this route, I don't know what it's going to do. I have no idea what it's going to do today, but maybe we get a Tuesday morning situation, which is what happened back in 2015 with the waterfall decline. That happened to be a Friday Monday situation. Maybe we get a bottom there. And who knows? This to me is the first support level, because it's an intersection of this lower channel line and the 382 retracement. If we break through that, lots of times you turn in between a 382 and a 50%er, which would be maybe around that 3160 area, and then of course the 50% retracement is the one here, 3128. On Thursday, which is the 27th, which is a strong astrological turn date. So you know, here you got to wonder whether it's going to be an acceleration point.
Let me throw a little virus perspective on this. Remember SARS back in 2003? Over the course of 38 trading days, the S&P 500 dropped 12.8%. Then we had the avian flu in 2004, and the S&P dropped 6.9% over 141 trading days. MERS, which was in 2012, over 43 trading days, the S&P dropped 7.3%. Ebola, 2013, Over 23 trading days, the S&P 500 dropped 5.8%. Zika, which was in 2015, over 66 trading days, the S&P dropped 12.9%. So far, coronavirus, 23 trading days, down 2.2%. Now, this article may be slightly, let me see what the date line on this article is. I just updated moments ago. So that's current as of right now.
Would you mind forwarding that to me?
Yeah.
Because I want to do a little work on that. I mean, what I want to see is,
let me show you what I was looking at. Okay, here are the market reactions during the virus emergencies, and up here above it, okay, markets heal quickly from disease outbreaks. So that swine flu sell-off, it took 6 months. This was the change. SARS.
Yeah.
See, there's the 1 month recovery, the 6 month recovery. What I'll do, Garrett, is I'll just shoot you this. I'll just shoot you this link in an email. I'll send it to you right now so I don't forget.
Yeah. Do you remember that other one that you had that came up from 1320, 1420, 1520? Remember that one?
I do remember that. Yeah, I'll have to do some digging, but I can find it for you.
Yeah, that I found that fascinating because, everything on this planet seems to be cyclical. It just sometimes the hard part is defining the cycle, but you can't argue cyclicality on this planet, and that even worked for pandemics. And one of the things that happens when you'd think in prior times it's hard to make the argument that population has gotten out of control. But it all depends on where you are, and at any point in time. I mean, things change, but it certainly looks like we're there, and at one of those times. And one way or another, things seem to come up to thin out the flock a little bit, and so it's a little scary. I mean, it's 100 years ago, none of us were around to have that in our memory banks as as research data.
Oh, that's true. Bert's not here today.
What's that?
I said that's true. Bert's not here today. You said none of us were around then. I was just making a joke.
Yeah, I
try to get Bert laughing if he was out there.
Yeah, it's that's interesting because because those things happen, and this one, whether there's more to it than meets the eye or not, in many ways doesn't really matter, because the bottom line is, whether it is or not, it's something we're going to have to deal with. And I saw this video that a Chinese fella did, and I'm kind of sourcing people that are in China, because why would the opinion of anybody else mean anything on something like this? Sure. And
exactly.
the news that comes out from, I mean, like me, it's like, what do I think? It's like, who cares? I don't have any, I'm here, I don't know anything. But so I'm kind of interested in looking at the situation from the eyes of people that are there on the ground, and so I've done that, and the sources there are just, it's incredible. I got this one video, and I sent it out to a couple of people who had expressed some interest in that, and they came back that, well, this video doesn't open. And I thought, I opened it 5 times yesterday and talked to some people on it and so forth. But as soon as the I don't know what name, something police, whoever the people are that are the truth police.
Right.
Let's call it that.
Oh, they're starting to do that on Facebook. I saw somebody publish something about Bernie and his $15 an hour minimum wage, which would put people just high enough to be in his 51% tax bracket, which made him end up, making $7 an hour. Facebook has officially said that's not true. The,
And of
the
course-
media is spun completely out of control here.
It really is. I mean, the thing on this, and this is why they come up with something called conspiracy theory. First, they set it up with conspiracy theory, and then they find some people that are wackos. So they say, okay, well, see, that's what conspiracy is. It's all by wackos. Well, what does that accomplish? It accomplishes not being able to look at anything that has anything to do with conspiracy. And I said, if you want to look at the history of mankind, and just take a look at the cycle and take a look at the sequence of events in the cycle, you're going to find one thing that's consistent, and that's conspiracy. And why would that be? Because there's always somebody who wants to take over. Right? No matter who's in charge, somebody wants to take over. Now, if it's Republican and Democrat, hopefully in normal times, it's fairly reasonable either way. And, back in the old days, both parties were conservative. So what could go wrong? Well, today, in this, over the past few decades, they've been trying to keep American history out of the history classes that our young children are learning, and to minimize the founding fathers. And boy, let's make them racist. Let's do that. And my comment would be, hey, look, if you want to talk about that, it's a horrible thing, slavery and so forth. But I said, correct me if I'm wrong, I believe those people were slaves in Africa as well. I don't think they went over there and were, kidnapping doctors and lawyers. They were buying them from slave traders, as I recall. So the invention, per se, wasn't invented here. It was invented over there, number one. Number two, those people who came over here, I think now, particularly generations later, are a lot better for it, as opposed to being a lot worse for it. And if I'm wrong, my guess would be a whole lot of those people would be moving back to Africa, and I don't see that happening. Why somebody can't bring up that argument, I don't know. But people, we don't want to hear the truth. I mean, reparation for slavery, it's a terrible thing. But didn't every race that came to this country have a hard time? I mean, everybody, not everybody was slaves, but, we're about to put ourselves in a position if the liberals and the socialist liberals win on this, where we're about to all be in that slavery, that's the outcome of socialism. And I believe that's the main reason why, those folks were amassed on our border, not too long ago, and maybe still. So anyway, it's going to be interesting to see. But my point was, going back, is they removed that video, which talked about the reality of things over there, what the true numbers were. They discussed this incinerator situation, which obviously, I guess, when you have something that's that contagious. Incineration is, and you've got literally apparently a bunch of dead bodies around. And one thing I've noticed, I haven't seen, and maybe it's just me, but I haven't seen anything talking about the progression of the virus. I mean, what happens when you get it? Now, on some of the videos that I saw, people were convulsing. I mean, they had some stuff right out of China, and people were convulsing and throwing up blood, but other than that, I haven't seen anything on this. But from what I can tell on the reality side of it, this is a very nasty virus. It happened once it's incubated and starts its process. It's very fast and pretty nasty too as well. So this to me is it's a real question mark here. You've got a market. I was just going to show you, wanted to point out to both you and John. Let me see if I can go somewhere else here. This is VIX. Now, let me go to, have you guys been watching the VIX lately?
Mm-hmm.
Yeah, John usually has me bring it up at least once a day.
Check this out. Now here's the daily. Here I don't need that on there anymore. But here's the daily. the VIX signal is when you break out above, or below the brown or the yellow band, and you close outside of the band. When you come back inside the band and close inside the band, you get a signal. So I call this setting up for a VIX buy signal. Now, the reality is it's really going to be a VIX sell signal when you come back in. But when you come back in with a sell on the VIX, it's a buy on the market.
Right. Right.
And you can see that here. Here's a signal here. There's a low down there. Here it is here. Here's the low down here. Here's the thing where you're out of the market here and come back in near a low here. And the secondary part of that down here. Here's the big one here. It's the bottom down here. So they don't always work, but most of the time they work pretty well, basically because you're getting an extreme in a motion, which, translates to market price and so forth. So now the other side of that is, can you see over here where my pointer is?
Yeah.
Does that show up?
Oh yeah.
Here you break out and then you run up like crazy for a while and come down, and then you run up again here, and that sets up this bottom here. But here, again, you break out at whatever this is, 25, and run up to 37. So, you can breaking out of it, it may or may not be the be-all, end-all. Usually you get something like this, and then you come back inside, and you've got a buy signal for the market. But if this is a pandemic that's going to knock out a third of the people on the planet or whatever, then this thing, could run up to parts unknown. So it's a real hard one. Normally, you look at this, and you look at things such as, let me go here, let me see if that's not what I want. But let's say you go, that's not what I want either. Here you go. You get your 10-day AD line down here. It's negative 120. That's not a big deal. But at negative 400 or 500 or more down here, you're usually pretty oversold. Your McClellan oscillator here, if you can see this, it's down at minus 176. That's here, just to put it into perspective. Let's take a look at it. See, you're getting down to these oversold levels. Now here, when you got down here, market bottom. You get down here, market bottom. Even here, market bottom. Here, market bottom. Right there, market bottom. So when you get down to these levels, market bottom here, and then here, the extreme market bottom here, Christmas of 2018. So this is an extreme right there. Here's another one over here when you're first starting to sell off for this first bottom. But normally in this range here, you're getting down to heretofore extreme levels that have created bottoms in virtually all of these points in the past. Are we creating one here? Do we need to get down a little bit further? Do we get one of these, or do we create one that's way lower than that? That's the hard part right here. I mean, we're starting to get at a place where, if it weren't for a coronavirus, you're starting to get your buy tickets ready. Let me pull out of here for a sec. But that's getting down there. Your daily, here's my daily information over here. You're not really oversold by any means. My indicator here can continue down substantially. It can go down below as much as it's gone above here. So not here. This is a CCI average. Your slow yellow one is still up pretty high. I mean, the red one's gone off the chart here. Your stochastics are still nowhere near being really oversold, and you're just starting to get into the 30s on the RSI, and you need to get below 30 for that to get down there. Over here, you're approaching the lower Bollinger Band, but that could be a lot lower tomorrow. So there's a lot of stuff going on. I wanted to point out on the VIX, though, this is the daily. So you're up there. This is pretty impressive to be aware of, but let's look at a weekly. Well, I think I was on your show and pointing out a couple of weeks ago that the VIX was giving what would be the setup for a buy signal, and I thought, This happened. This one right here. If you can see that here, let me blow that up. Come on. This one right here. I thought, weekly signals. I'm impressed with weekly signals because here they are. This isn't even a signal. It didn't even make it, but there's the bottom. This one didn't really make it through the line either. There's another bottom. This one did. There's a real bottom. And this one did, and there's another bottom. So they're pretty darn good signals. Now, this one happened, and we were at an all-time high. I mean, theoretically, this kind of a signal should happen when you're near a low. And this one really caught me. I was very perplexed, I think, on your show. I said, I'm getting set up for a weekly VIX buy signal. When I say VIX buy signal, I'm referring to the market being a buy. Classically, it's a VIX sell signal that translates to a buy signal for the market. And I thought, how in the world can you have this happen at an all-time high? How do you get a weekly, which is very strong buy signal in VIX, at an all-time high? And lo and behold, you had a 3 or 4 day rally. There it is. And then now you've got this is just today. Again, it's not a weekly signal, is not a real signal until you end the week. So we're not at the end of the week, and this line could be up here or down here by the end of the week. So we're as premature as you can get for a weekly signal. It doesn't get worse. We're at Monday. But I'm pointing this out. I'm thinking this is incredible. And then when you go to the monthly, now interestingly, when we get our weekly signal finished, it'll also be a monthly signal too, because we end this month, I think, on Saturday. But look at this. Here's a monthly. Now, in the past, first of all, John, it's very rare to have monthly, weekly, and daily VIX signals.
What's that popping noise in the background? You guys hear that?
Not on my end.
Okay, well, go ahead. I mean, we can still hear you just fine. There's just something going click, 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 click. Go ahead. No, we can hear you. It stopped. Whatever it was, it stopped.
Must be the government, huh? Anyway, shouldn't laugh at those things. Send people out in black suits to talk to you. Anyway, here's the monthly signals. I mean, these things are fairly rare, of course. And here they are, and of course, monthly buy signals are. I mean, here's one in December 2008, and then the signal comes in right there, and that was a rally that led into January. Then you had your 2-month decline into your final low in March of 2009, and that's where you came up here, and probably where this reversed. Yeah, look at that. That's February, and you turn here. It's kind of like a divergent buy signal. It's a divergent sell signal on the VIX, but that happened right at the end of February, and the market bottomed on, what was it, March 9th. So, and then here you are again at the next major turning point, the one we showed earlier in 2011. And then you have the 2015 low, and the low in early 2018. I mean, there's only 4 signals. And, there's this one here. And this was the one at the December low, December of 2018. So these are actually, I need to put that in there. Here we are again setting up for it, and again this isn't going to necessarily be meaningful until the end of this week. But again, if it weren't for the coronavirus, I'd be amassing funds for a monumental buy signal here. Now I don't know what I'm going to do, but anyway, I just thought that was kind of interesting stuff to be aware of. So let me see if there's anything else in here. Those are the main things I had to take a look at. I notice the 65-minute, John, it gave, I think you were talking about a buy signal that came in there, which it certainly did. And the 65-minute showed that up probably right here where it was happening, which was, an hour ago. And we're coming off the bottom and just extreme oversold on the 65 minutes. So anyway, this is going to be interesting because I don't have any experience in playing pandemics. It's not
Guys,
my.
I got to step away for just 2 minutes, but you and John keep going.
Okay. So anyway, John, that's all I've got. I don't know. This is going to be. I think the way I'm going to play it is look at my 30-minute stuff and look and see if there's some opportunities there, and be awfully willing to get out in a hurry in either direction.
Yeah, you're right.
So this is a spooky thing, though. The thing that I find really bothersome on this is that that really caught my attention when Dwayne was talking, whatever it was, a week or so ago, maybe 2 weeks, when he was talking about that, every 100-year situation, and he was listing the things that happen. I thought that's fascinating, and and there they are, kind of seemingly happening. I guess the Spanish flu, what was it, 1918, and certainly lasted, for a long time, and I think 30 to 50 million people died, and there was couple 100,000 infected, which is huge, back then. And lo and behold, I really hadn't looked at a pandemic cycle before I was aware of, things that happen to reduce population every now and again. But I hadn't made any study of it. I thought, boy, isn't that fascinating that they happen, in the same ballpark over long periods of time. So anyway, this looks fairly spooky.
Mm-hmm. No, it's very. It's everybody's mortality is at stake here with this thing. So
yeah, and the hard part is. This scary thing, and it's funny how things kind of seem to have a more inclusive view. But here you are at a time thinking, gee, I wonder where a safe place is, and my comment would be, me too. It's
sailing out
obvious.
in the middle of the ocean right now wouldn't be a bad place to be. So
yeah, I want you wonder. And
or on some remote island.
Yeah, they I heard there were cases over in Iran, and now I just heard last week, I think even late last week, that there were 2 cases reported in Iran. Today I hear there's 50 deaths in Iran, and this is inside of a matter of days. So you go from 2 reported cases to 50 deaths, and anyway, it's a pretty scary deal, and it's certainly obviously real in every respect. So I hope they come up with something to take care of this. By the way, I saw far be it from me to make movie recommendations, but we saw a good movie over the weekend. I don't know if you've seen it, The Call of the Wild. One of my favorite books. One of my favorite books when I was a kid. It's Harrison Ford and so forth. But it just struck me as a very nice movie. It was. I don't know if it was a happy ending per se. In some respects, it was. In some respects, it was a sad ending, but it was a nice story, and it's kind of nice when we have, positive movies and stuff like that for a change. Of course, I guess that's the one good thing about a depression. If one is up and coming, one of the things that happens in a depression is all of a sudden you go back. Tradition returns, and movies have happy endings and stuff like that. So, just part of the cycle.
Yeah.
Right.
I haven't been watching CNN lately. I kind of gave it up. But the thing they just started in the last couple of weeks, the Windsors, boy, it's some kind of a story.
Gentlemen, I've got to run. I apologize.
That's all right. No, we're glad to have you pop in.
Yeah, no, it's a pleasure to speak with you, and thank you for letting me share some time with you.
Yeah, good luck to everybody.
I'd like to have you back on the show later this week. We're going to talk about something a little different.
Okay, good luck to everybody. Bye.
All right, thank you.
All right, guys.
Dwayne, let's if there's a chance, Dwayne, maybe we can talk this afternoon.
Call me.
Yeah, okay.
You
let me know what's good.
You
time.
call me, I'll answer.
Okay.
Anytime an hour from now.
Okay. All right.
After an hour.
Very good.
All right, buddy.
Thanks so much.
All right.
Bye-bye.
Okie doke, guys. Let us. I'm going to pull up the Concierge Trade Alerts. In case you didn't get a screenshot. Now, as a CFRN passport holder, of course, you would have received these alerts last night and in real time. Let me scroll down and find it again. There we go. All right. Now, there are many trading methodologies and strategies out there. Some are incredibly complicated. Some are incredibly expensive. John, have you logged out? All right, I hit his mute. John, if you're trying to get back on, call me, and I'll open your mic back up. Don't want to listen in on your private conversation there. Okay. So last night, 6:45 p.m. Eastern, every CFRN passport holder got these instructions. Okay. Now again, many trading methodologies and strategies are very, very complicated. It takes months, gosh, even years to learn some of it, and then there's some of the stuff that people really love, like counting waves. But talk to somebody that's been counting those waves for 3 years, 5 years, 10. Yeah, do this. Get 10 wave counters, put them in a room. They've each got 10 years experience counting waves. Tell them to go count the waves on the current chart. And I bet you get 10 different answers. A little bit confusing, okay? We have worked diligently to create something that's quite simple. Here's gold for an example. Okay? Consider being along at 1673. Had the market reversed and sold off instead of the rally we anticipated, then you had alternate instructions. Obviously, the one we're focusing on is being along at 1673. Now remember, some strategies are very complicated as well as being very expensive, right? So, getting long right here at 1673. Trust me, there are people in the world that could complicate the heck out of that. You'd need 9 different things on 9 different screens, all telling you 9 different things. And you would be very, very confused as to what a person should do. There's no confusion on this chart. None. Zero. It says, consider being long 1673. This is blue and climbing. And look right here on the trigger. What do we got down here? Blue and climbing. Getting out at a swing high is tough. It only happens by luck. Because you don't know it's a swing high or swing low till after the fact. Now we have something called an exit signal. On an extended move like this little black line, it's called the step line. Steps up and over, up and over, up and over. You get the idea. But eventually it steps up, steps over, steps up, steps over, and then just steps over. When that happens, the exit signal is the close of the first red candle below the step line. The closing price of this candle, 1686.30. So we'll round it down and call it 1686. Okay? Now, 86 minus 73, that's 13 points. Gold pays $100 a point. So from the entry to the exit signal, it's a $1,300 per contract move. If you've earned the right to trade 10 contracts, it's a $13,000 move. Okay. Now remember, this is not a woulda, coulda, shoulda scenario. The instructions were simple. Nothing complicated. Okay. Here are the results. Is this an anomaly? Is this a one-time thing? No. Did you know that there's thousands of hours of radio broadcasts just like this, recaps just like this, at youtube.com/CFRN. So if you think this is a one-off, go back a day, a week, a month, jump back 2 years. You'll see the same thing played out again and again and again. Over and over and over. Why? Because we understand how markets work. And if you have any desire to become a consistently profitable trader, you're going to have to learn how markets work. Now, some people will teach you parlor tricks, some kind of indicator that does some kind of a backflip while the other thing's doing this, then, it's like a magic trick. Except we know that magic is sleight of hand. Sometimes it works, sometimes it doesn't. That's why when we do the recap every day, we do it with the current daily chart. We never go back and cherry pick days. We never go back and cherry pick trades. Because we don't have to. Because we understand what's happening in the market right here, right now. Okay? Important prices, important areas are almost always tested. So this 1673 gave us not just this move, but it gave us a smaller move, 1673 up to we'll call it 1680. $700 per contract move. But you see, this is red and falling. This was blue and climbing. So when we get back below the trigger here, we have to be more cautious. Here, we didn't quite make it to the trigger, but what we found was the BBC, and we know that a pullback to the BBC holds more often than it doesn't. And so that gave our traders yet another opportunity. 1678, 1686, 15 points. However complicated your methodology is, there's every good chance that someday you're going to figure it out. There is another option. You can learn a very simple methodology that is not incredibly expensive. And we have a long-standing tradition. We're willing to put our methodology, simple and elementary as it is, up against the most complicated, the most expensive quant trading, algorithm trading behemoth that you can find anywhere on the internet. And if their methodology can beat ours, well, then I'll eat my hat on public radio. In fact, I'll go out and buy a really big hat just for the occasion. I'm not bragging or boasting. Not at all. What I'm sharing with you is simply the truth about trading. It can be as hard and as difficult as you want to make it, or it can be simple. Okay? All right. Let's go on the S&P. Last night, the market dropped in the opening 30 minutes, and then it stopped. We expected it to stop there. We did not know if it would be a reversal or just a bounce. It was a bounce. I don't know if I'd call it just a bounce. The low looks like about 32.90. The bounce went up to 33.06. That's 16 S&P points on the bounce. We're typically not counter trend traders. Those are not part of our alerts. Our alerts always have to do with the trend. And when you've got red and falling overhead, and you're below the 50-yard line here, we got no thoughts about being long. So we triggered. Now, why did it stop here? I forgot to throw that in. Because of that. The last time price got above this level and pulled back, it held. It held. I mean, it held from 32.90 up to the all-time historic high, 33.98. That makes that pretty important, right? So we scoot back over, open it back up. So from 96 down to support, it's about a 6-point move. Back above the trigger, 7-point move, back to the trigger, and from the trigger, we drop 65 points per contract. Alexa, 65 times 50.
65 times 50 is 3,250.
Okay, if you were trading one contract, and you got out at the exact swing low, you did good. But we know that's not reality, right? I mean, who gets out at the exact swing low? Somebody having a lucky day. That's all. Don't ever try to make it more than that, because that's all it is. And anytime you make it about anything more than the highest probability of what will happen next, you just seal the fate on your trading career. Last night at 6:45 p.m. Eastern, every CFRN trader got the news. Okay? All right, on the Dow, every one of our traders was alerted at the same time in the private Telegram channel. Sell 28,570. We've dropped over $500 per contract. At $50 a point, you can do the math. And if you've earned the right to trade 10 contracts, you can even take your shoes off if you need to do that math. Remember, this is not woulda, coulda, shoulda. This is exactly what happened. The magnitude of the move today may be a little greater than some previous days. But just do yourself a favor. If you're tired of the complicated, you're tired of the expensive, you just want to learn how markets work, so you can just learn how to trade, so you can just show up every day in front of your charts, sit down, actually know what's going on. All these candles bouncing and dancing, and one's red and one's green, and how do I make sense of it all? It's quite simple. You take away all that confusing stuff and you break it down just like this. You get a bearish cross, price pulls away, price pulls back to touch that BBC, gives you a leg, gives you a retracement. And what do we expect here? If the market had not closed right here on Friday afternoon, the highest probability move would have been a move to the downside. Well, we got one, that's for sure. So maybe you don't trade gold, maybe you don't trade the S&P, maybe you don't trade the Dow. The good news is our methodology, our strategy, our indicators are fluid across every market and every time frame. I'll say it again because people will tell you that's not possible. Our strategy, our methodology, our indicators are fluid across every market and every time frame. Go back, watch the years and years and years of daily recaps, just like this. The proof's in the pudding. And again, there's thousands of hours of pudding at youtube.com/CFRN. So maybe you don't trade the S&P or the Dow or the gold. Maybe you're a Russell kind of guy or lady. All of our traders told to sell the Russell at 1649. It dropped 26 points, give or take, at $50 a point. Alexa, 26 times 50.
26 times 50 is 1,300.
So that's a $1,300 per contract move. If you got out at the swing low. I didn't. If you've earned the right to trade 10 contracts, that's a $13,000 move in one market. And the session's not over. You see, most traders, most training organizations go to work every Monday morning, 9:30, like everybody else on Wall Street. We, on the other hand, are a peculiar people. We go to work on Sunday night at 6 p.m. Eastern. Why? Because that's when the markets open. Imagine the look on everyone's face who showed up this morning on this candle 9:30 Wall Street open. They're probably still crying, huh? Because they missed all that. As John was so kind to mention, because of our methodology, because of our strategy, because of our alerts, it is incredibly rare that a move like this escapes us. Again, not bragging or boasting. It's simply because Michael and I understand how markets work. And I don't care what methodology or strategy that you attempt to use, it ain't gonna work until you learn how markets work. Because the methodology or the strategy has to work inside of the market. And if you don't have any idea how the market itself works, performs, functions, you see the dilemma there? So the complication is really not a plus. The high prices, that's really not a plus either. We wanted to make sure that what we had to offer was available to people just like us. People who struggled to learn. People who had their accounts blown up mercilessly. Time and again. A lot of, and we were very complicated in the beginning. There was an indicator on planet Earth we didn't have on these charts, including the secret ones that we created ourselves. And we got rid of 98% of it. What mattered, what contributes to the bottom line, you're looking at it. And of course, the natural mind says, well, that's insane. That's not possible. Well, again, there's years and years of video recaps, just like the one I'm doing today, on what happened today. And half of our audience right now are people that were in the live training room this morning. They saw it happen. Or they were participating via the private Telegram discussion channel. And on the S&P here, just a second, I'm going to show you exactly how that unfolded. Let me show you the NQ. So 93.10. Did anybody contact you last night and go, yo, you might consider selling 93.10 on the NQ? Do you have that person in your life? I'm guessing not. But this is what we said. There was nothing complicated about it. Just, consider being short 93.10. Red and falling. Red and falling. In fact, it's not just red and falling. Red and flat. It does not get any more bearish than that. Down here, we finally got to pull back to the BBC. It was rejected as we expected to be. And see where we are now. It's a a 260 point move at $20 a point. Alexa, 260 times 20.
260 times 20 is 5,200.
That's a $5,000 move per contract. If you've earned the right to trade 10 contracts, of course, you can do your own math. Was today an abnormally outsized kind of a day? Sure. But as you go back to youtube.com/CFRN and you review last week's recap, one of the days, or one from last month, or one from 2 years ago, you'll see these same kind of moves. When the market moves, we're there. Instructions are in place. This didn't come after the fact. This came as it was happening. So we've covered everything but crude. Last night we said to sell 5180. Every one of our traders got the message. Everybody got the memo. We triggered. We bounced. We triggered again. And we went from 5180 to 5060. This is $1,200 per contract move. If you trade crude and you found it to be difficult or hard to manage or understand, you should come see us. We'll show you a different way of looking at the market. Better yet, we will teach you. We will teach you how markets work. Swing high was at a zone, swing low at a zone. This plays out day after day, over and over and over again. Could it work on the agricultural products? Of course. Remember, it's fluid across all markets and all time frames. Consider being short 886. Soybeans pay $50 a point, just like the S&P. From 886 to 876, that's 10 points. It's $500 per contract. Soybeans, we don't talk about soybeans a lot, but soybeans are a very tradable market, as you can see here. Okay? Now, let's do this. Let's check in our daily chart. Look at where we bounced off of. Remember, we drew the line beginning of the show. From 32.13, we've bounced up to 32.30. 32.13 to 32.30. That's a 13-point bounce since the show started. Now remember, we had the line there before price got there, because we anticipated price doing exactly what it's doing. We even said it could bounce as high as the 24% fib there. It could even go to the 38, because that's where the bullish cross took place, and that area acts like a magnet. Now that doesn't mean it has to go there today on this candle, but just this bounce was more than enough to give you your points for the day. Now let's take a look here at the ES. Here's that gap lower open. I'm going to bring up my 5-minute chart. I did a mentoring session Friday with one of our relatively new passport holders. I recorded it, as I do whenever I'm asked to, and it was such a good mentoring session, I asked his permission to share it with the rest of the community, and he said absolutely, by all means. He goes, if there's anything I can do to help any one of the other partners or members, I want to help. So that's posted on YouTube right now. youtube.com/CFRN. It's the last video that was posted. It's about 30 minutes, 35. It's the entire mentoring session from beginning to end. Now this morning, in the private members discussion group, I'm going to walk you through our discussion and how it went. Okay. And here's where I want to start. Okay. Here we have the 30-minute chart. Okay. Now I'm going to switch. No. Let me do it this way. Here's a 30-minute chart. What's happening? Okay, price is reaching up to try to touch the BBC. Now let's go find that on the live chart. Okay. On the live chart, you see this? Okay, now let me bring that back up. The snapshot. I can grab and drag that, that'd be better. Okay. So, right here, this is opening candle. We come roaring up, and then we reverse. Those of you who've been through our training, you know about the 10 a.m. reversal, the potential. Anytime you have an opening 30-minute candle, directional like that, that closes at the high or slightly off, or at the low or just slightly off, the table is set for the potential of a 10 a.m. reversal. So bulls came in at 9:30. Buyers said, woo, these are cheap prices. Look how much we were paying back on Friday. Giddy up. We had no thoughts of going long here. None. Okay? Now, let's go back to this. That was the 30-minute. This was the 5-minute. 30-minute, we got a red candle. We're red and falling with a red candle. That's a sell, right? But the 5-minute, we were getting a bullish cross. Price was pulling back. You can't sell a market when you've got blue and climbing. So what do we have to do? Again, 30 minutes says sell, but you can't if the 5-minute is blue and climbing. Wait for the 5-minute to give you a bearish cross, pull back to the BBC, and as it starts to drop, then get short. I commented again, 30-minute, still trying to reach up to the BBC. Let it happen. If price gets rejected, which it did, go to 5-minute, wait for the bearish cross, the pull back, and the continuation down, and just get short. Our alerts are never counter trend. I was just pointing it out because we do have some traders that do trade counter trend. Those were not triggered, and they were not official alerts. So, okay, look at this 5-minute, blue and climbing, which negates our information from the 30-minute. We need price to get below the BBC, and we need blue and climbing to become red and falling. Just like that. It went from that. Now, do you think all the world, because lots of people watch 5-minute charts, gazillions of traders watch 5-minute chart, do you not think that they were getting ready or were getting long right here? We were waiting for our shorting opportunity. We needed to see this. 5-minute, now attempting the bearish cross. There's an update a few minutes later. See how we almost have a bearish cross right there? A couple minutes later, we got it. Price has now pulled back up to the BBC. What do we expect to happen? We expect price to be rejected because that's how markets work. Now, we want this to fail, right? But just a few minutes later, it's looking bullish. That's okay, because we're not in a position. We're waiting for the market to tell us what to do. Wait for it to fail. That's what the beginning of failure looks like. I asked, is it failing? See, getting back below red and falling, that's called failing. Look at this. We went from that to that. It's 4 minutes. See the time? Now these are Mountain Standard Time that you see on my chart or on the Telegram. My actual charts are Eastern. I think it failed. And as Valerie commented, it fell right into the daily double. I had positioned the daily double to take advantage of this move. And it worked out. Why did it work out? Because we're brilliant? Not really. We simply understand how markets work. You can learn how markets work. Just the way I read this to you, like I was reading a newspaper. I mean, look over here. I was in this particular move. What happened over here? Price got below the BBC, right? We had a retracement. And then right here, we're red and falling. We know the 30 minutes telling us to get short. And we dropped, this thing dropped from 32, about 32.48 to 32.32. And we get back above, but we're not interested because we know we're only interested in selling short today based on the 30 minute until the 30 minute dynamic changes. So again, we dip, we have red and falling, we pull back up. There's your goal for the day. There's your goal for the week. There's a goal for the day. Now, after that failure, I drew this. I said we have an obstacle in our path. There's a low, higher low, higher low. Price is pinched up here between red and falling and the BBC. Still bearish on that 30 minute. See how we came right down to the trend line? Bounced back to the BBC. Will it fail again? If it does, see alert 3132, because I gave all of our traders exact instructions of what to do on alert 3132. If it doesn't do nothing, 5 minute price needs to be below red and falling. See? We're above red and falling. Shortly thereafter, price drops below that trend line. And continues to drop. And continues to drop. And then I gave all of our traders the area for support to expect a potential bounce. Look at the bounce. Where did it go? Right back to the BBC. Why? Price always reverts to the mean. See, it doesn't have to be complicated. Price ran into support, which pushed it back up to resistance. Then what happened? Well, here we go. There's that bounce I just showed you. Then we took out, we closed below. So that's important. We closed below that low. Okay. Now all we need is a retracement back to the BBC so we can sell it again. We have a new dynamic in place. We have a bullish cross. Look where we are on the 30. Price appears to want to pull back up to the BBC at 32.45. That would be about right here. If it can get that high, do we want to short it? Sure. As soon as price gets back below red and falling. Never going to sell anything against blue and climbing. Red and falling. You can start today. Wherever you're at in life. Wherever you're at in your trading. If you're aggravated, if you're frustrated, you can start today. No money out of pocket. No payments for 6 months. Now this is made possible through our partnership with PayPal. When you register, when you sign up, they will present you with the offer. All you got to do is accept it. They'll qualify in about 30 seconds over the phone. And you will be receiving these very same type alerts tonight in the private Telegram channel. Concierge of the Logic 247. Speaking of Logic 247, live training room every day for 2 hours. Unlimited one-on-one mentoring. If you go and watch that mentoring video from Friday, you'll get a little taste of what it's like to have a mentor who's willing to spend time with you when you need help. All you have to do is book it. I know lots of places promise one-on-one mentoring. Can't seem to find very many that actually provide it. If you know one, that'd be cool. I'd like to know of somebody else that actually does it. Hit me up. So let's go to Logic. Now the concierge alerts, which we just went over, that's a static report, comes out every evening shortly after the Globex Open. The numbers are good for the entire session. And on most days, you'll see that important prices, important areas are almost always tested. In other words, those alerts will trigger, most days, multiple times. And we saw evidence of that here today. Now let me show you what Logic looked like last night. Remember, we start work Sunday night, 6 p.m. Eastern. We are in week 82. Last week, week 81, we had 30 alerts, 2 never triggered, 28 actionable, 5 of them were stopped out. 18% of triggered trades from the Logic alerts got stopped out. That's what we've averaged over the last 82 weeks, is 20%. I think it's a little below 20%. I like to be conservative. Here we go, week 82. First alert, S&P. Thumbs up means made the target. Crude, counter trend, still waiting. There's crude on the short side. Remember, thumbs up means we made the target. There's the NQ, S&P again, Dow again, NQ again, crude oil, S&P, S&P, S&P. So the results so far this week for the Logic 247 alerts I will show that to you. 11 alerts issued so far this week since 6 p.m. last night. Now, that's on Logic. You saw all the other alerts on the Concierge. 11 total alerts issued. That one counter trend trade, we're still waiting to see if it will trigger. So we've had 10 Logic alerts that actually triggered, found the target, and nothing's stopped out as of yet. That's not a typical day. One of the things that we're going to teach you, not only how markets work, we're going to teach you the truth about trading. We're going to teach you to approach it with a probabilistic mindset. You're going to learn something that most people won't teach you. This isn't a business based on secrets or magic. It's based on simplicity. No secrets, no magic. Just a basic understanding of how markets work. Once I teach you that, the clouds part and you go, whoa. It's a business based on probabilities. The way you become a consistently profitable trader is you must have a definable edge. A definable edge. A consistently definable edge. I mean, we all know everything works some of the time. Nothing works all the time, except the market. Market works all the time, every day. Right? It does. Once you understand how markets work, you then have a high probability of positioning yourself on the right side of the next move. Better said, the current move. So, if you're ready to get started today, call Valerie, 949-42-EMINI, or send her an email, support@cfrn.net. Time for our good word for the day. Today we're going to talk about depending completely on God. Corinthians 3:5. 2 Corinthians 3:5. Our competence comes from God. He makes us competent. The full scripture says, not that we are competent in ourselves to claim anything for ourselves, but our competence comes from God. He has made us competent as ministers of a new covenant. Not of the letter, but of the Spirit. For the letter kills, but the Spirit gives life. Jesus told his disciples in Matthew 26:41, watch and pray lest you enter into temptation. The spirit indeed is willing, but the flesh is weak. What did he mean by that? He meant that without the empowering presence of the Holy Spirit, which he had just told them they'd soon receive, they weren't equal to the challenges they were about to face. It wasn't a matter of his doubting their devotion and willingness to serve him. He just knew they couldn't do it by themselves. Neither can you. So the sooner you stop trying, the better off you'll be. God isn't looking for educated, sophisticated, well-meaning flesh, or any other kind of flesh for that matter. He will only bless you when you acknowledge your total dependence on Him. That means praying and leaning on Him before you start, and continuing to pray and lean on Him until you reach the finish line. It also means that if God doesn't send you and you insist on going, or if He tells you to do something and you try to accomplish it in your own strength, you're going to fail. What's more, He'll allow you to keep failing until you reach the place where you can say, like Paul did, not that we are competent in ourselves to claim anything for ourselves, but our competence comes from God. He has made us competent. Do you really think I could have figured out those weekly trading zones on my own strength? It is when we reach the end of our resources that God's power kicks in. So the word for you today is, instead of leaning on your own strength, your own resources, make a decision from this day forward that you're going to depend wholly and solely on God. And that's our good word for the day. One last thing I want to mention. We launched our Christian crypto project a couple years back. And then Bitcoin went into this crypto winter. But if you read the newspaper, listen to the news, you know that crypto markets are starting to wake up again. We've been waiting. The entire project has been put in cold storage. Nothing has changed. Everything's still in place. The last official trade that crossed the tape for CTG was $40. And then when the bottom fell out of Bitcoin, we ceased trading. Everything in cold storage. Knowing that, as in life, the winter would eventually pass. And I think we're starting to see those green shoots. As we continue to toy with 10,000 on Bitcoin and get above it and hold it and drop back, the day's coming when we pull back and hold 10,000 on Bitcoin for the last time. This is when we want to be positioned to bring our project out of cold storage, back into the mainstream, and begin our awareness program all over again. I want you to think about this. There are 2.4 billion Christians worldwide. There are only 1 million CTG tokens. Do the math. Now, everyone else created the Carl Sagan cryptos with billions and billions and billions of coins, and even the ability to create more coins if they decide to. Not so with CTG. Now, during our pre-sale, our community took a position. They knew it was a long-term type of trade. I'm excited to begin to talk about these green shoots and about coming out of cold storage. Now, Michael and I, we locked up the treasury after the pre-sale. The day is coming when we're going to open the treasury back up. there will be, at some point, 1 million Christians out of 2.4 billion that own at least one CTG token. Some hold a lot more, so a million's just not quite enough to go around already. Now, we've all heard end times preached. We've all heard Mark of the Beast preached. I'm not a doomsday prophet. I'm not saying the world's going to end tomorrow. But what if? What if a day comes when this cashless society that they talk about really comes to pass? And some say, the dollar's never going to go away. Maybe it won't. But, there are a couple countries that are already almost cashless societies. Everything digital. So, should the day ever come, should Revelation actually be true? Should there come a time when believers like you and I will not be able to buy and sell in the marketplace without that mark? What's your decision going to be? I'm sure you've thought about it before. What's your decision going to be? What if there was another option? What if there was an option outside of the world's economic system? What if there was a currency that traded amongst those who do believe, those who refuse to take that mark? It's something to think about. Now, as we gear up to reopen the Treasury, those of you who are already CTG stakeholders, we'll be in touch. And those of you who maybe weren't around when we had our original pre-sale, if what I just said resonated with you, if you can envision a world where someday believers are doing business with believers, using a method outside of the world's economic system, get a hold of us. We'll make some official announcements here in the days to come. Just want to give you a little something to think about. Again, I'm not a doomsday prophet. Not saying the world's going to end tomorrow. But this coronavirus, I believe it's going to get worse before it gets better. But I believe modern technology, modern science, modern medicine, I think they'll get a handle on it. What about the next one? We don't know. But I have read the book, even the last chapter. Your interpretation of it may be different than mine. But I think everyone wants to do whatever they can to protect themselves, to protect their families. So stay tuned. Thanks so much for tuning in today. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard, and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading Emini Futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.